FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 3/30/20. Well, gold market got crushed, came back. Stocks are still down. Where are we headed? What is going to happen next? I mean, that's always the question, and that's why you tune in to FSN. And we'd love to know what you think is going to happen. Why don't you email us, kl@kerrylutz.com. Well, our good friend from the Daily Gold is back with us now, Jordan Roy Byrne. Jordan, you are the voice of caution in cautioning people not to get carried away. Gold wasn't yet in a sustained breakout. You said this about, I guess it's almost a year and a half ago. You were the voice of reason. And here we are, gold broke out, got up to nearly 1,700, fell back, went back up a week after the crash, and now we're lingering in the low to mid 1600s. Where do you think we are right now?
Well, Kerry, I mean, the moves in the last month have just been really insane and unreal. I mean, from the end of February until now, we've seen in the entire precious metals market, we've basically seen a false breakout, a crash, and then a false breakdown. And by false breakdown, I'm talking about if you look at the monthly chart of like GDX, GDXJ, or silver, and if you look at a monthly line chart, which is just the close of the month, it will look like, oh, well, this was just a correction. I mean, nothing really out of the ordinary happened. And it's where you close the month, which actually is, I mean, when you're looking at daily, weekly, monthly chart, whatever, it's really where you close that period. That's such an important takeaway. So, we basically had this false breakout. We had a crash, and now we had a false breakdown. And so at least with respect to GDX and silver, it's, very encouraging that we reversed, almost all of these losses by the end of the month. With respect to gold, what's also encouraging to me, Kerry, is that gold was able to rally back to 1,700. I mean, before we had those huge moves higher, that those 2 days where it was up like almost $100 each day, I was thinking that gold could at some point probably retest 1,375 to 1,400, kind of the breakout level that we broke out from last year. And the fact that gold was able to rally all the way back to the previous peak around 1,700, that to me is really encouraging. I mean, if you look at what happened in September 2008, before gold made its final bottom, the high was around 1,000. It rallied back at one point to, I think, 940 or so, but it did not, wasn't able to rally all the way back to 1,000. So just when it's able to recover all of the losses and get back to that previous point, that's just, it's very encouraging to me. And the other thing on top of that, Kerry, is GDX coming off the October 2008 low. It rallied 56% in 9 trading days. Now, in recent days, off the low, it rallied 61% in 7 trading days. So, the fact that gold was able to rally all the way back to the peak, and that we had a similar move in GDX to what we had coming off that major bottom in October 2008, that makes me very encouraged that I think last week, I mean, the weight of the evidence probably says that was a low. And, now we could be, for a couple of days or a couple of weeks, we could be backing and filling, maybe retesting those lows at some point.
Yeah, well, my good friend Nick Santiago from In the Money Stocks, he nailed it, as he often does. He called 19 as the bottom for now in GDX, and that it was a buying opportunity. And I was talking to him about a few stocks. One was a major gold royalty company that we all know and love, and somewhat undervalued. It was way, way beat down. Like, you couldn't believe it. It was trading for less than, I don't know, like a year's revenues. It was totally ridiculous. and looked at that stock. He said, that's a definite buy. And it doubled, just about doubled in about 4 or 5 days. Now we're looking at the GDX as of Friday, in that 24 region. And it's anybody's guess where it's going to head from here, huh?
Yeah, I mean, looking at the short term, I mean, the volatility has made it really hard to get a sense of where things are going. But looking at the short term, I think over the next couple of days or so, I think it's more likely to head lower than higher. I mean, there are some gaps. These markets had very aggressive emotional moves, and when you leave a gap, sometimes they tend to get filled right away. Yeah. So I think, we could see a little bit lower here in the minors, but the same thing happened in 2008 after we had that explosion off the low at 56% move in 9 trading days. Then the market, it didn't do an exact retest of the lows and make a double bottom, but it retraced, I want to say 70% or 80% of that initial rebound before moving much, much higher. And also I'll mention this about GDXJ, the parent index of that, it's MVIS. They have a chart on their website that goes back to 2004. And GDXJ, it bottomed at the same time, but for 4 or 5 weeks, it did a lot of backing and filling until the very beginning of December. And that's when it really took off. So it doesn't mean we're going to repeat the same scenario as what happened in late 2008. But I mean, it's helpful to know because it can give you a guide. And so I would not be concerned if, we did some backing and filling here for a couple more weeks and the market was a little weak. I mean, after all, we did just, as you pointed out, I mean, not just in one stock, but we've seen a lot of stocks, made massive upside moves just in a span of days. And so after you get an extremely sharp, sudden move, you can get a consolidation for a little while after that. So I could be wrong, but that's what I'm looking for. Some backing and filling here in the sector, gold included. I don't think it's going to break 1,700 right away. But we'll see. I think things are set up. I mean, with the policy that's been put out, we all know that it's extremely bullish for precious metals. And I mean, we've just dodged, I guess you could say, a bullet or a landmine with what's happened in the last month or so. But things are setting up, very, very bullishly for the sector over the months and quarters ahead.
Yeah. So we're looking at this thing. Basically the economy has blown up, right? We're just hoping that we don't go into a major depression, but it certainly looks like that's possible, doesn't it?
Yeah, I mean, obviously, this is where we have to talk to the epidemiologists and figure out, how long this thing is going to last. I tend to like to look at things in the middle. That's a good expectation. I mean, unfortunately, in our culture today, everything's binary. Everything, is either 0 or 100. And so if you look at things in the middle, that gives you a good framework. And so I don't think, there's people who are saying this is going to kill 3 million people. I saw Goldman Sachs had a note about that. They were saying it was no big deal for the economy, even though 3 million people could die. I mean, geez, What's wrong with those people? And then you have people who are saying this is just the flu and it's going to blow over. And that's kind of originally I looked at it as like a really, really bad flu. And it's way more contagious than the flu, and it's 10 times as fatal as the flu. So I don't think it's nothing. And at the same time, I don't think we're going to see a couple million people die, but it's still having a huge impact on the economy. And look, unfortunately, there's a couple realities here. Number one, I don't think this bailout package, they're giving too much money to corporations. They could have given money basically to taxpayers and citizens. And you could have given everybody a couple thousand or even $3,000 or $4,000 a month for a couple $1 trillion, I think. And that would probably have smoothed things over for the next couple months, which would given us a lot more time to, flatten the curve and come up with some treatments and gain more understanding about the virus. So I don't think the package that they're doing is really going to help the economy that much. And at the same time, look at what South Korea has done. The leaders want to blame China, but look, there's South Korea, Singapore. There's countries who have gotten this under control, who saw this coming, we ignored the warnings a couple months ago, and now we're paying the price. Had we heeded the warnings and taken action a couple months ago, there would have been some pain, but not as much pain as what we're going through here and now. I mean, long story short, I think the economy will recover at some point, but there's really, I don't think we're going to see like a super strong recovery probably for another year. I mean, we could see, somewhat of a recovery, over the summer and maybe, over the fall if the flu season is not that bad. But there's really no, because it looks like we're trying to go half and half, where we're going to kind of, pull back on some of the social distancing, and then we're going to do that. And what's going to happen is the virus will come back in some form again during flu season, and we'll have to do more measures. So I think, again, I'm not an epidemiologist, but, we have to suck it up and go all in for the next month and really flatten the curve everywhere. And I don't think we're going to do that. And then as a result, I don't think we can expect a real strong economy probably for another year or so when we get closer to having a vaccine and we have a lot more understanding about the virus.
What about all the money that's being printed up out of thin air? You concerned about that?
Well, I would say I'm not concerned because I'm involved in precious metals. But if I wasn't,
that's not the right answer.
Yeah, if I wasn't involved in precious metals, I would be concerned. I mean, I think, it's going to be different than 2008 because I think we're going to be seeing more money that's going into people's hands and more money that's also going to go into the economy. Obviously, politically, there is huge agreement everywhere that, no more money for the financials. I mean, I know the corporations, the financial sector, they're getting some money, but politically, we have to see money go into taxpayers' hands. We need to kind of see those measures. We need to see the inequality. We need to see some redistribution of money, or else that's going to lead to massive social problems down the road. I mean, I am concerned about inflation. I think, I talked about this in my book. We are at the start of an inflation cycle that could last 20 years. I just wasn't sure. I mean, I was saying a year or so ago, maybe sometime during the next economic expansion, we're probably going to run into the start of an inflation problem. And now it's probably going to be sooner than I thought, because it looks like the next expansion will start, if not, in a quarter or two, then, who knows, maybe early next year. But yes, I am concerned about inflation at some point. It's definitely going to pick up. And last thing I'll say on inflation, one important thing, Kerry, is if you look at the CPI, I know the statistics are all lies and all that, but what really matters with the CPI and these statistics is where are they trending? Whether they're telling you inflation is 1% or 3 or 5%, what really matters is the trend. If you look at the CPI, this was trading in a range for a while in the 50s and 60s, and it started to creep up in the mid 60s. And then I think it was 1968 or 69, it made a big breakout. And that was the point when basically hard assets really started to strongly outperform the stock market. And so if we're looking, where we are today, you can, for the CPI, you can draw a trend line from about 30 years ago. I mean, it's a down trend line. But if the CPI breaks above 3 or 3.5% or so in the next couple of years, that is going to be a huge signal that we're at the start of a huge move higher for inflation. So over the next couple of years, that's something to watch for with regards to inflation.
Yeah, I'm inclined to agree with you. All this free money kicking around, it's not like the economy's productive capabilities are going to improve. Maybe we'll be able to import more stuff from China when they get up. One of the biggest problems is China's been shut down for 3 months. They're coming back online, but the rest of the world is shut down, so they're not in a position to really be buying stuff except for the basic essentials, medical equipment, pharmaceuticals, etc. So we're really 6 months into this thing before the world comes back together and they turn back the on switch.
FSN Radio. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Right. I mean, that jives with what I said before, where I think, if we want to pull back on the social distancing after a couple more weeks, I don't think it's going to, for the reasons that you said, that's why I don't think that's going to make a huge difference, and why I said I think there's going to be economic pain either way. And then there's the people who say, look, we're not going to get a real recovery until we totally flatten the curve. And, I can't predict the future, but I tend to agree with that. I tend to think that's more likely than not. And obviously, the Republicans are in power with respect to the White House and the Senate, and they're seeing that they're going to be in real trouble this fall during election season. So that's why they want to get the economy back and moving as fast as possible, so they have better prospects to win their elections. But I mean, it's already been a crazy year just what's happened already. And I don't think we've seen the last of it. I think this could, we haven't seen the last of, what could happen over the months ahead.
Oh, it's insane. If you had told me 10 years ago, 20, 30 years ago, that what we've encountered over the past 10 years was possible, Jordan, I would never believe you. I'd never, ever believe you. And yet here we are, right? I mean, here we are. How can this be?
Yeah.
I mean, don't you shake your head? I know you do. When you wake up in the morning and you just say, how the heck did we get here? Right? How did we get here?
A lot of bad, a lot of bad policy.
Yeah.
Honestly. And it's just been bad policy from the Fed, bad policy from the government. And, it's like I said, the answers to a lot of things, at least to me, tend to be in the middle. And, just this 0 or 100, all or nothing, everything has to be binary. That it's not good for leading a country.
Oh, agreed. Definitely. Totally agree with you. And you were pretty spot on predicting the gold cycle, following it, I should say, and properly interpreting it. What are your thoughts for moving ahead? I know you think it's going to be a year before the economy takes off, but as far as precious metals go, are they going to take off before the economy?
Yes, I think they will. Because that after these huge crashes, you look at what happened in 2008. The stock market bottomed, as we all know, March 2009. Precious metals bottomed 5 to 6 months before. So that's, originally what my thinking was is if the economy doesn't bottom out until, 12 months from now, that would mean that precious metals could take 5 or 6 months to bottom out, just as a guide. But like I said, I think the huge rebound that we've had in GDX, which matches 2008, and gold rallying back to 1,700, which it did not do in 2008. Those two signals tell me that it's more likely than not we've probably bottomed already. So, my thinking for precious metals is this is where inflation expectations are really important, because if you look at, what are the gold is driven by falling or negative real interest rates. And then, you get that from aggressive Fed rate cuts or rising inflation expectations. And so we've already cut rates to 0. So it has to be rising inflation expectations this time. And so I think once the market kind of senses that at least economic activity is kind of bottomed out and it's starting to return, that's when precious metals will really, really start to outperform. I mean, they've already started to outperform, obviously, but that's kind of, as far as fundamentally, that's what I'm looking for. Inflation expectations crash, and they've had a big rebound already. But I think, once once the markets start to sense that the economy is very close to bottoming out, that's when you'll see precious metals really start to move higher and sustain it. I think we're, at least for the next month or couple weeks or so, we could still be in the backing and filling phase here, Kerry. But look at how precious metals performed after 1929. Look at how precious metals performed after 2008. So the history is quite clear. We're getting the policy that we need for precious metals. So I am extremely bullish over the next couple of years for precious metals. It's just that the action in the last month, I mean, the getting trapped, at first it trapped the bulls and then it trapped the bears. It's just been so insane that
in one month. I mean,
it's taken a lot out of me. So that's why I'm not, pounding the table on it as much. But look, I really should be, especially if we back and fill here and people can buy some things at lower prices. It really is a table pounding buy. And look, we could be set up for another historic move over the next couple of years. So I am, extremely bullish.
And you think it won't just be the bullion that goes up, it'll also be the mining stocks as well.
Yes, and the fundamental reason for that is if you look at what I was saying before about, you have Fed rate cuts or you have rising inflation expectations. When you get Fed rate cuts as the driver, what that impacts the most is that's best for the gold price, large gold producers, royalty companies. When it's a Fed rate cuts economic weakness scenario, those are the areas that outperform. Then when you get to the rising inflation expectation side, and I mean, this happened, you go back to the 2001 low. At first, it was really gold and gold stocks that moved. Then silver stocks really started to move once the economy had bottomed out. And you go back to the 2008 low, inflation expectations bottomed, I think, around the end of December. And so that was when silver and the juniors really started to outperform on the upside. So the point is, we're set up for this move higher for the sector over the next couple of years. It's not going to be driven by rate cuts because the Fed's not going negative. It's going to be driven by rising inflation expectations. And we know it's more likely this time because, as I said before, policymakers know that they have to get the money in the hands of the citizens and taxpayers. The money has to hit the economy. It can't just hit financial markets the way that it did in 2008, 2009. So so it's going to be it's going to be led by rising inflation and rising inflation expectations. And in that scenario, that's when you see the stocks do a lot better, the juniors do a lot better, and silver does a lot better.
Yeah, and silver has been, I mean, $14.50 silver is kind of madness here, but I'm sure it's going to turn around. Hey, Jordan, the stimulus package, whether you were an Uber driver or you got a company that does 10 million in sales per year, you can get the government basically to give you free money, and it's all legal. It's not even question of legal or illegal. It's a question of they want you to take the money because the government would rather you retain employees than fire them. They'd rather pay you to keep your employees working, whatever that means right now, rather than have you fire them, go on to unemployment, welfare, Medicare, Medicaid, whatever it is. They'd rather just give you the money and pay them for the next 2 or 3 months. And by the way, just as an aside, I can help you do it. I'll coach you. I will show you how to get your free money from the government and keep your business going. It's just an aside, Jordan. But anyways, we really do appreciate you coming on as always, especially because your forecasts have been so accurate in the past. Just tell us where we find you again and how to connect with you and get a subscription on the web.
You can find everything I do at thedailygold.com. I have a lot of free info that I give away. I post articles and interviews like this. And I do have a link there, I think, on the top right if you want to learn about my premium service.
All right, thedailygold.com. There's a link to it in the show notes to this interview on financialsurvivalnetwork.com. Please send us, you can tweet us at Kerry Lutz, Facebook page Financial Survival Network, or just email us kl@kerrylutz.com. That's kl@kerrylutz.com. Jordan, a pleasure. Thanks so much, as always, for coming on, and we'll be in touch with you in the coming months ahead.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.